Welcome to Seeking Alpha's Wall Street Lunch, our afternoon update on today's market action, news, and analysis. Good afternoon. Today is Wednesday, October 23rd, and I'm your host, Kim Kahn. Our top story so far. Is Boeing at a bottom? There's a case to be made that all the bad news is baked into the plane maker's stock, with shares down slightly after Boeing reported a $6 billion quarterly loss, and the market is down overall. In line with an earlier warning, Boeing reported a net loss of $9.97 a share on revenue of $17.8 billion. The company burned through $1.3 billion in cash, leaving it with about $10.5 billion at the end of September. CEO Kelly Ortberg says the company has lots of work to do ahead before it can build a newly designed plane. We need to know what's going on, not only with our products, but with our people, he said in a memo to employees. And most importantly, we need to prevent the festering of issues and to work better together to identify, fix, and understand the root cause. He said the company must fix a broken culture, get smaller, and improve execution on new plane models that have been delayed for years. Ortberg's memo included remarks from his first earnings call. Boeing in the past 6 years has worked to overcome 2 deadly crashes of its popular 737 MAX jet, the pandemic's effect on air travel, and global supply chains. A criminal conviction, factory delays, a blowout of a door panel on an Alaska Airlines flight, and a strike by 33,000 machinists. SA Investing Group leader Dhiran Bechai says a 1% decline in sales for the entire company is not extremely bad, but it should be noted that the biggest part of the impact of the work stoppage would likely be felt in Q4. The results were not pretty, but with the challenges Boeing faces, a $2 billion free cash flow burn, while a lot, is actually quite okay. Also reporting this morning, AT&T followed suit like its peer Verizon and posted a small revenue miss and an adjusted profit beat for the third quarter while reaffirming its forecast for the full year. For the full year, it continues to expect adjusted EPS in the range of $2.15 to $2.25, midpoint $2.20, versus $2.20 consensus, on wireless service revenue growth of 3%. Broadband revenue growth is seen up 7%, and adjusted EBITDA growth is in the 3% range. In today's trading, Wall Street slumped, weighed down by a slide in technology and consumer discretionary stocks and a post-earnings plunge in some high-profile companies. Meanwhile, a continued bond sell-off on bets that the Federal Reserve would not be as aggressive with rate cuts as previously expected also weighed on equities. Technology was slammed as chip stocks fell, led by a big decrease in ARM. The British chip designer canceled a license deal that allows Qualcomm to use its intellectual property. Among active stocks, Texas Instruments got some buying love after a third-quarter beat, as Wall Street analysts had a largely positive view on the stock. Benchmark reiterated its buy rating and its $230 price target on the stock. The analysts believe Texas Instruments' elevated internal inventory should allow it to aggressively compete for sockets it was forced to pass on during the period of COVID-related supply constraints. That should continue the momentum it is currently enjoying in its non-auto and industrial business. It also allows the company to flex its supply and capacity strengths as its broader core markets begin to see shipments return to consumption levels next year. And Enphase Energy plunged after reporting a wide miss on Q3 adjusted earnings and a 31% year-on-year decline in revenues, while also guiding Q4 revenues well below consensus. For Q4, Enphase issued downside guidance for revenues of $360 million to $400 million versus $433.5 million analyst consensus. Non-GAAP gross margin was seen in the range of 49 to 52%. In other news of note, NVIDIA CEO Jensen Huang said the design flaw that caused production of its Blackwell line of GPUs to be delayed is now fixed, and that it was entirely the semiconductor giant's fault. "We had a design flaw in Blackwell," Huang said in Denmark, according to Reuters. "It was functional, but the design flaw caused the yield to be low. It was 100% NVIDIA's fault." Huang added that Taiwan Semi, which manufactures processors for NVIDIA, helped the company recover from the yield issues and resume the manufacturing of Blackwell at an incredible pace. And in the Wall Street Research Corner, billionaire hedge fund manager Paul Tudor Jones says he is long gold, Bitcoin, and commodities, and also noted that the tech-heavy NASDAQ Composite Index was a great inflation hedge. On CNBC, he said the playbook for the way to reduce U.S. debt-to-GDP ratio is to inflate your way out. He said, "You have a small tax on the consumer, and you run interest rates below inflation and nominal growth above inflation. All roads lead to inflation. I am long gold. I am long Bitcoin. I think commodities are so ridiculously underowned, so I am long commodities. He added, I think most young people find their inflation hedges via the NASDAQ. That's also been great. I probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that, and I own 0 fixed income. That's all for today's Wall Street Lunch. Look for links for stories in the show notes section. Don't forget, these episodes will be up with transcriptions at seekingalpha.com/WSB, and join the elite community of real investors to unearth great investing ideas. Just head to seekingalpha.com/subscriptions.